Happy Wednesday. How you doing out there? Are you having fun yet? Hope all is good with you here today. This is a quick show that we do called the Closing Beat, just a reference to our crafty little name, Jazz Wealth Managers, a play on the music there. Hope you'll check us out at jazzwealth.com. We manage our own portfolios here. Long-term retirement investors, we just do things differently. We like to stay engaged with customers. We like to teach along the way. Most importantly, we are fiduciary financial advisors, registered with the SEC, unlike most other advisors. We went through that headache. Yeah, we did. Anyways, one of the ways that we stay in contact with our customers is weekly classes. We do a live class right over there in the speakeasy. We call it Wine and Wealth. We get together, share a drink with me. I'll teach you something new. And tomorrow, our class, actually, you can see the events on our website, but tomorrow we're calling an audible. Our class will be changed again because of what's going on in the market. There are 4 things that you need to know with this market moving lower. We're going to cover them. What I like to do is when the markets are going up, I go, well, that's great. What's the opportunity? When the markets are going down, I go, that's not cool. Don't look away. What's the opportunity? There are 4 opportunities that you can use in a down market versus just looking away and saying, well, it'll recover. Dustin shows the towel all the time. I know. No, let's make the most of it. So I've got 4 things to cover tomorrow in great detail with you guys so you can make the most out of your dough while the markets are, well, you know what they're doing, right? Not looking too good there. Anyways, we're also playing a game. Well, that'll be tomorrow at 8 o'clock, by the way. I'll send out the invites to our customers tomorrow. Anyways, we're playing a game called Guess the Dow, jazzwealth.com, Guess the Dow. You know the drill. Go to the website, place your guess. If you're the closest without going over, we'll send you a $100 gift card there. Our jazz artist of the week is Snarky Puppy. If you've never heard of them, an incredibly talented group of individuals. The song I have today for you is called Lingus. If you're a musician out there and you want to see people absolutely manhandle the 5/4 time signature there, from the drummer to the horn player, is incredible, this song. So you might want to check that out if you are into that style of music. I do appreciate you guys sending in your suggestions as well for jazz artists. We'll get through all of them. We got nowhere else to be. So every week we will cover a different jazz artist there. Anyways, let's talk about the stock market today. You got the Dow lower by 1,467 points, 140 on the S&P, 392 on the NASDAQ. We're throwing around some big numbers lately. And aren't you kind of getting used to it? Like for me, I'm kind of like, 1,000 points. What else you got? Well, it's just another day, right? No, this is a very, very volatile market. Technically, we did partially end the bull market today. The Dow did anyways. The end of the bull market for the Dow is officially today. The S&P is flirting with it, but we're only down 19.04% on the S&P. So technically another, 10 minutes when the markets open up tomorrow. If we happen to close another percent lower, that would be the end of the bull market in terms of how most people measure it. We don't usually measure it by the Dow, although that makes a headline. We usually measure by the S&P. And so the bull market remains intact for the S&P. I actually had 2 different classes prepared for today because I'm like, well, if it ends, then we need to talk about that. If it doesn't end, then we have other things to focus on. So we'll hold off on that until the bull market does come to an end. But it kind of seems like it's just a matter of time, right? Like we did technically get there today, but we'll see what happens. So what's going on? You got yesterday all this excitement about White House stimulus. They talked about the payroll tax cut and the payroll tax holiday. And the Democrats said, nope, under no circumstance are we going to do that. I don't know how you argue that. I just, like I said yesterday, I don't get that. Like, you've got a chance to provide real stimulus here. Maybe they just feel like it's not the time. Maybe they don't like Donald Trump. I don't know what it is. But for whatever reason, Democrats said absolutely not. They want more direct stimulus. Now, sadly, what that means, I don't play sides with politics here, but what that means is instead of giving people, the individual, the tax break, they're going to give corporations the tax break. They're going to give it to the airlines. They've already started that. They're going to give it to the cruise lines. They've already kind of guaranteed that. They're also going to give it to oil companies. In fact, the oil lobbyists were at the White House today, so they're already got their hands out looking for money there. What do we get? The Democrats have proposed, well, first of all, they're waiving the copay. That's already in existence. So if you think you have the virus, you want to go get tested, they're waiving the copay. Oh, what are copays? $20 to $100 maybe. So that's really the stimulus you're getting right now. There's some other things they put out there, maybe like extending the tax deadline for filing your taxes. Yay, give us an extra month or so, whatever. And help with mortgages, federally backed mortgages, mortgage payments, things like that. Nothing substantial. Really sad what they've done there. And the markets don't like it, right? Today the markets are like, great, you have no stimulus for us, then there's no reason for us to bounce. There's no reason for us to believe that this is somehow going to be just overdone there. And that put the attention back on the negative news in the market for the day. Overnight, you had the Bank of England cut rates by 0.5 point. which puts them at a 1/4 point. And that was largely kind of like, hey, that's probably what the Fed's going to do, right? We're essentially going to be at 0 next week. We'll find out on Wednesday what the Fed decides to do. But the Bank of England now down to just a 1/4 point. Interest rates are a 1/4 point over there, so kind of crazy there. And we also had the Fed come out overnight and say they had to increase their repo operations to $175 billion a day until at least the middle of April, tax day to be exact, or the current tax day as it stands. Remember, it was 2 days ago that they bumped it up to $150 billion. So the markets look at that and they go, uh-oh, this is getting out of control here. And so more negative news for them to focus on. Really sad there. Anyways, the S&P 500, you've got it on the screen there, lower on the day, flirting with breaking that, or turning into the bear market there. The NASDAQ does outperform the S&P 500 today. It didn't lose as much, still a nasty day for the NASDAQ. And the Russell 2000 is, again, by far the worst performer out of the group. Really just a falling knife in that term there. So for the moment, we are still talking about corrections, how long corrections last, how bad they are, all that stuff. We are currently right at the average in terms of the decline for a correction. A correction is anything more than a 10% drop, but not quite a 20% drop. The average correction in the stock market lasts 83 days and is actually 19%. That's where we're at right now in the S&P 500. This one has lasted 19 days. If it does go into a bear market, let's say we close tomorrow down 20%, it would be the fastest the market has ever gone into a bear market ever in history. So kind of exciting. I mean, maybe some of you don't like it, but it's kind of exciting. And this is now the 15th day in a row that the S&P has traded in a plus or minus 1% range. So no small range days in the markets so far. We'll see what happens going forward. I expect the volatility to continue. In the Dow, you got some stocks that stick out here. United Healthcare was your stronger one. It did finish down on the day, but still relatively strong compared to the rest of them there. They're getting assistance and help and everything from the government for the virus, and I understand that. So they were one of the stronger areas today. Healthcare held up okay as well. On the downside, you got Boeing. Huge down day for Boeing. Really bad day in terms of news for Boeing. Down 18%. That's $41 lower. They are going to draw down from their $13.8 billion credit line. Imagine if you had a credit card or a line of credit on your house for $13.8 billion and you said, you know what, I'll take all of it. This is really looking bad. I'm going to take all $13.8 billion. That's essentially what they did. By the way, Wynn and Hilton did the same thing. Boeing got all the attention. It's a big stock there, but that's one thing. The second thing is they are putting a hiring freeze, right? And which you can kind of understand because they're not making as many planes and everything. They've got a hiring freeze going on. So they're borrowing a bunch of money and they're freezing their hiring. They also lost 46 jet orders. So I think it was Air Canada canceled some. Anyways, it totaled out to 46 jets that were on order that have been canceled. And interestingly, if you look at the Dow, there you go. So from this high to the low today in the Dow, there are 30 stocks in the Dow, of course. You can break it down and see which stocks have had a greater impact. Boeing, you got about 5,500 points here to the downside. Boeing accounts for about 1,000 of these points. So if Boeing would have held up or maybe didn't do so bad, you could add 1,000 points back to the Dow. That's how bad it is. In terms of Boeing's performance there, just incredible. I mean, really. So Boeing, the weak one that stands out in the Dow, in my opinion, well, for today. Looking over, CTSX, there we go. So what's the matter with my screen here? Everything is just going crazy. There we go. All right, moving back here, sorry. So in terms of the S&P 500 today, strength in CTXS, that's Citrix Systems, that's WebEx, that's the at-home, streaming online meeting sort of thing. You got Gilead Sciences, 1.8% on the day. They're the ones that are really, I believe, on the forefront of the vaccine for the virus there. At least they want to say they are. So they were stronger on the day there as well in the S&P. And AMD held up. This is kind of like the darling in the semiconductor space in terms of analysts. They're the most positive on this stock. And that one held up on the day as well. On the downside, it's going to be cruise lines again. Royal Caribbean losing 14%, Carnival Cruise Lines losing 10% on the day, and Norwegian Cruise Lines, I believe, also, well, they were the worst, down 26% on the day. They're going to ban people from over the age of 50 going on cruises. or over the age of 70. That's what it was, over the age of 70. So that was their negative news hitting them today. And then you had oil stocks lower on the day. Apache, the stocks that really can't weather these lower oil prices, they were hit the worst. Apache, Occidental Petroleum, which cut their dividend, and they're cutting their capital expenditures as well. Noble Energy down 20% on the day. Those are your weak ones in the S&P 500. In terms of sectors, let's do your sector breakdown today. Money came out of everything, right? Your sort of inverse correlated areas, bonds, gold, money came out of them too, right? So it was just weakness all around. Here's the good news, and I'm going to share a chart with you in a second, but here's the good news. 35% of the market is made up of financials and tech. Right? You know, I always say you need tech and you need the financials, in particular the semiconductors. So I always say if you don't have the banks and you don't have the semiconductors, you don't have a reason for the market to bounce. Here's the good news. I don't know that we're at a bottom here, but if you look at financials, hyperextended to the downside. So if there's even any kind of little snapback in financials, that's enough to help support the markets in the short term. If you add in tech, tech extended to the downside, not as much, but if they even tend to bounce back a little bit, you get those two sectors have an okay day, you have a reason for the market to rally there. If you add in healthcare now, at least as the way the weightings break down right now, if you add in healthcare, you now have 50% of the stock market's weight, the S&P I should say, all in three different sectors. So if you even just get a little bounce in healthcare, a little bounce in financials, a little bounce in tech, that's where all the eyeballs are right now in terms of seeing if this market's going to bounce or not. If those sectors remain weak, you have a recipe for a bear market, essentially. That's where you're at. Anyways, going on here. You got oil lower on the day, just staying down near lows here, $33 a barrel, really, really weak. You had Saudi Arabia is now up to 13 million barrels a day they're kicking out versus 12. I think they upped it by 1 million overnight there. So you got some more weakness in oil. That hurt your oil explorers. XOP down 6% on the day. The weaker names were the ones that took the bigger hits there. Your Marathon Petroleum down 9% on the day. Southwestern, there you go. Southwestern down 11% on the day in that space as well. REITs hitting new lows, down 5% on the day. Rates actually went a tick higher there, but it was one of those days. Money came out of everywhere. Just, it didn't matter. Today was just kind of a sell everything type day in a consistent way. It wasn't like a panic day. It was just a very steady downtrend all day. But anyways, utilities typically do well or at least hold up in lower rate environments. Nope, out there today. Hit new lows as well. Retail, new lows on the day, down 7% on the day. You had some ones that stood out a little bit. Grubhub lost 12% on the day, was one of them. Signet was the other. Yep, down 10% on the day. And Aaron's, just the rent-a-center sort of thing there. No stimulus for those hourly workers, those on a lower income of the spectrum that may be customers of Aaron's, means no money being spent at Aaron's, so that stock lost 10% there as well. And also the possibility that those people lose their jobs if things really get weak here. All right, in the transport space, you got new lows on the day. However, it closed off the lows, still lost 4% on the day. Just broad weakness all around. Airlines and rails. Airlines, you got American Airlines down 4%. You got United Airlines down 6%. Alaska Airlines, which has been a little more volatile in this mix compared to the others, down 2% on the day. Rails, also in transport sector, Kansas City Southern, they held up okay. Norfolk Southern lost 5%, hitting new 52-week lows in the meantime. As far as rates, money coming out of rates too, right? You can understand a little bit of a profit taking there, but no real significant bounce today in the long bonds, 30-year. If you're looking out to the 30-year, that's concern. Now we got the repo action and stuff going on there, but you have people looking to refinance like crazy, man. Let's check this out. So we get data on this. Mortgage applications are up 55.4% since last week. Right? This is a weekly economic number that comes out. Refinances are applications are up 78.6% since last week. Right? So a lot of these companies have said, we just flat out have stopped all of our marketing. You have Rocket, what was the one? Rocket Mortgage. They said they've just flat out, or Quicken Mortgage with Rocket Mortgage. They've said we've just canceled all of our marketing. We don't need it. We've got more customers coming in than we know what to do with. Refinance is up 78.6% week over week. So you guys are out there, right? You're wanting to refinance. Well, I can't blame you, right? You look and do what you got to do there. All right, let's take a look at the individual sectors here, break it down by which ones are in bear markets or not. So I put a little chart together for you. Here are all the S&P sectors. We're missing one. S&P sectors Percent change from the 52-week highs. You got energy, naturally. You know that's the worst one, down 54%. Financials down 32%. Every one of them in red is currently in a sector bull market. Real estate being the last one today, breaking into a bear market, losing 20%. The ones in black here still have some room to go. Consumer staples, healthcare, which I mentioned, has been holding up a little bit, and utilities, all flirting with the idea of a bear market. But if you like looking at individual sectors, or you're one of those that says, hey, I want to put some money to work, I don't know where to go. If you like severe discounts and you've got a lot of time, that's going to be energy. Financial is obviously deeply discounted from not only a price perspective, but a fundamental perspective as well. Valuation's really low in the banks right now. On the other side of things, if you're concerned about the economy and you go, I don't know, we're going into a recession, I don't like this, consumer staples, they tend to hold up the best. They also tend to be one of the first to recover in terms of the, once we do recover out of any sort of recession. And healthcare, of course, just at the bottom of the list there. So wanted to share that with you. Now, if you're a dividend player out there and you say, I don't like this market, I'll just go for my dividends, I'll find stuff that pays higher yields, I'll go into those sectors and look for individual stocks or buy like a sector ETF or something, let's go take a look. Here is the yield by sector in the S&P 500. Energy, currently the highest yielding area. It should be, so the way it's performing. You got basically a 12% yield if you're looking in the energy space. Real estate and utilities, typically known to be higher yielding areas. They are, of course, staying the same. Consumer staples, 2%. Look at technology, 1.25%. Better than a lot of high interest savings accounts for technology. Now, that's a volatile area of the market, but you usually don't see much of a yield there. So that's impressive. And consumer discretionary at 1.5%. If that's something that you guys are interested in. I just thought I'd share that with you, some different data on a day. I was trying to guess, like, what are you guys looking to do? You know, you looking to pick on this? Do you like this downturn, or are you scared? And so I was trying to give you some different data points there depending on where you're at. I cannot make a suggestion to you, so I'm just trying to offer the best that I can. All right, some stocks that were lower today. McDonald's, 5%. These are all lower on virus concerns. People maybe not going to McDonald's, maybe not going to Chipotle, lost 7%, maybe not going to Starbucks, which lost 9% on the day, making new lows as well. That was a couple of them there. Like I said, you got Hilton. Yeah, there we go. Hilton Worldwide lost 10% on the day. They just flat out got rid of their guidance. They said, we don't know. We're not even going to guide going forward because we have no idea what's going to happen. They also did borrow up to the max on their credit line as well. Maybe you could see that coming. I don't know. Moody's, this is the rating agency there, down 7% on the day. They lowered their full year guidance all because of the virus. Anything that I pretty much mentioned here is going to be because of the virus. One interesting thing, there's a guy, I forget his name. He's about a 50-year-old guy that started Rockstar energy drink. You've seen it. Come on, you've seen it at the motocross and everything. You've seen the cars driving around. Pepsi bought Rockstar Energy there, and they spent $3.85 billion in cash to buy Rockstar Energy. That's pretty crazy. So after all is said and done, the original founder of Rockstar Energy is getting about $3 billion in his pocket. Man, if that doesn't motivate you to go out there and grow a business, I don't know, man. That's impressive. So good for him. Anyways, you've got Xenia Hotels also had a lot of bad news out on the day. They got rid of their guidance as well, lower bookings overall. Stock was down about 10% on the day. Yeah. All right, in terms of the S&P 500, you've got 3% of the S&P 500 above the 50-day. That's 18 stocks. If we dig into those 18 stocks, there are now only 5 stocks that have a 5% range between the 50-day and wherever they're priced right now. I'll give you an example if you're curious. It's not a lot of stocks. Kroger's one of them. So Kroger closed here, 30.59 today. If you look down at the blue line, that's what we're talking about. How far away is it from the blue line, the 50-day moving average, which is largely known as like a medium-term trend indicator. Kroger is one of them, and there's only 5 of them that are 5% or more above their 50-day moving average. That's short story there. It's not a good sign for that. If you like buying discounts, that's a good sign. You might look at stocks that are far from their 50-day moving average. You had no new 52-week highs today. There's nothing to report there. You had 134 new 52-week lows. Some of the worst are going to be in the oil space. Apache, Diamond Offshore is the other one there, lost 20% even on the day. Naturally, Boeing hit 52-week lows today. Norwegian Cruise Lines getting a lot of attention as well, 26% to the downside. And then normally what I do is I point out those that were the worst, like Norwegian Cruise Lines, and then I go through and I look for ones that, yeah, they hit new lows, but they closed off the lows or they attempted to try to bounce. nothing. You got nothing out there today, so there's just no point in even going through that. So kind of rough there for that one. All right, a couple other things in the news. Goldman Sachs says that the S&P will actually bottom about mid-year, and they say that it's going to bottom at 2450. That's what they're telling their customers. That's another 15% lower, so I'm going to have to actually go like this. 2450 they're claiming is what they're shooting for their lows in terms of the bottom of the market. That's all the way down here. If we take today's close, we go down to 2450. That's not 15%. It's about 10% more to the downside. So if you believe in Goldman Sachs there and their research, we've got more downside to come there. So we'll see what happens after today. I don't blame them for having that comment. And then finally, you got Elon Musk. Just a simple tweet. I thought this was hilarious. Real simple tweet that just says, "The coronavirus is dumb." That was his tweet. Yeah. You know, there's an old saying, if you have money and you say things like that, you're considered to be eccentric. And people look up to you and they go, wow, I wish I could be like that, you know. If you don't have money and you say things like that, you are unstable. Right? And so money determines how you get to act, right? That's, I believe that was from Rich Dad, Poor Dad, maybe the second edition in there. Anyways, here we go. So for earnings tomorrow, it's mostly retail. You got some semis in there. Dollar General will report before the open tomorrow, and that's it. Tupperware is also in the mix if you care. Then after the close, you got Adobe, you've got Broadcom, DocuSign, Gap, the store, Oracle, Slack will be reporting. I know one of you is waiting for that. Ulta Salons and Zoomies will report as well. You've got some dividends coming out from Crown Castle, paying out $1.20. ADP paying out 91 cents. Domino's Pizza, 78 cents. Gilead Sciences, 68 cents. And we happen to own a handful of those, so you got dividends headed your way. If you're watching us on YouTube, I'll take a chance here, try to answer some of your questions. And then we can put this day behind us, right? What do you think about Uber and Lyft with these prices there? I think there's no chance they make a profit now. Remember, Uber had said by the end of the year they were hoping to be profitable. I don't think that happens. I think in their next earnings they'll adjust that and try to buy some more time. Down 10%. I think there's probably some room to go on that one if you had to guess. And I'm just guessing. Lyft, the same thing. Remember, Lyft isn't planning on being profitable till the end of next year. I don't know if that gets delayed or not. I know Uber probably have to make some adjustments there. So that's the case. Yep. Are we going to drop to pre-Trump stock market? Ooh, that would be a heck of a drop there. We covered last week in our class there the performance by president, actually. So we went through every single president. We said, well, what's the performance, the average annualized gains for each president, total performance, and then we actually tried to highlight what does the market do better under, Democrats, Republicans, and tried to share that with you. So that's in the dojo if you're interested in that. I don't know that we fall that far, though. That's pretty crazy. What's your gut feeling on where we're going? I think it's going to be a bear market. I think it's just too close with the volatility that we've seen. We don't even need that bad of a down day tomorrow or the next day to push this thing into a bear market. So I think we're going to put our stamp on ending the official bull market at this point. We'll see. Now, what do you got? Trump speaking later. I don't know if he's going to say anything special, but I think at 8 o'clock he said he was going to speak. I didn't talk to him, but we'll see. What's the future of Boeing? Can they recover? They will recover. Yeah, Boeing will recover. They've been through this game before. This is not their first rodeo in terms of either accidents, having their planes grounded. This is not the first time for that either. And it's also not their first weak environment. They know what they're doing. So while I can't say that's the price that you want to buy it at, that company will be just fine. It will be no problem. What happens the day after the market closes down 20% off highs? We haven't seen it in a while, actually. The day that it hinted at doing that, back in December of 2018, we started a V-shaped rally that never looked back until now, but spent the whole year just rallying ahead there. So I don't think that's going to happen this time, but we'll see what happens. Yep. Boeing's got credit issues. It could become an issue. Yeah. I mean, the good thing is they did get the money, so it's not like they're freezing credit lines out there. We haven't got to that point yet. That would be it's going to be a while before that. Remember, we haven't even seen any economic impact of this yet. We're hearing what's happening, but that won't report until the quarterly earnings come out as we start the next earnings season. So we don't have any real reason to suggest that we can put this all behind us here in the next couple of weeks, because we're going to want to hear from companies. How are they actually performing? So we've got volatility coming for a while. Yeah. If the market officially closes 20% down, I'm not going to suggest any leverage ETFs. Nope. Nope. Do we have any videos about the Fed repo markets? We did cover it when they started their process there, their QE4, which they don't want to call it that, but we did cover it initially. As I get more data, I could put it in there. That just changed today, by the way, so this week's been an active one for them. Not a good one, but it's been an active one. You've yet to see credit ratings adjust. When do you think that? I think you'll see it in the oil space first. I think you're already starting to get sort of whiffs of that out there. There are a lot of oil companies that are going to be in bad shape. Now, the government's going to check. This is what they're going to do. This is not a guess. This is exactly what they're going to do. They're going to provide low or no interest financing to the oil companies because they don't want to see them go away. Russia would love that. They want to see them producing and making it through this. So instead of tax dollars being cut for us, instead of maybe money coming our way or to small businesses, it's just going to go to oil companies to start. I would imagine that starts any day now. Yep. Thoughts on Lulu? Remember, they've got some issues there. So they're working through oversupply, less demand. I would imagine this is one of those companies. I mean, you're not going to spend $50 on a workout shirt if you're nervous about going to the gym, right? And seeing other people and touching the equipment and stuff like that. You are probably not going to spend that kind of money if you are thinking you're going to lose your job, or you're thinking that for some reason, your income is going to be lower or something like that. So I'd imagine they've got to really knock it out of the park with their earnings there. Oh, yeah. I would imagine. If they do cut payroll, well, apparently right now there's no talks of payroll tax cuts. Very disappointing there. But I mean, it could change. I mean, maybe they agree on something. The Democrats did say there's no chance that they would consider a payroll tax cut unless there were other measures in the bill that helped more directly with the virus. So maybe they come to some sort of agreement, but I don't know. They got it pretty bad for old Mr. Trump there. So I don't know that they're eager to do anything. I think if you're a Democrat, and I'm not picking on anybody here, but if you're a Democrat, what's the incentive to help this president out, right? And if you're the president, you know that. What's their incentive? Like, how are you going to get them on the same page now? That's a tough one. That's the world we live in. Yeah. Yeah. I can't say whether it's time to buy Amazon or not. I can say it's one of the more discounted areas. I know that people are a little bit more excited about this one because the feeling is you'll still order from Amazon. You might buy more from Amazon if you really panic and you read the headline earlier that said 150 million Americans are going to get the coronavirus. If you really believe that and you're really starting to hunker down and all that stuff, you're probably ordering more from Amazon. Again, we'll find out what their earnings. We don't know, right? So right now it's just all speculation. They haven't really... They haven't said anything. Oh, was I off? I said $50 for a shirt. You're saying $200. I don't shop there. Old Navy, man. You want to buy some workout stuff, you go right to the back of the Old Navy store. It looks good. Right? What do you care what you look like when you go to the gym? It doesn't matter. Put on whatever you got. I'm just cheap. I can't tell you if it's good to start a position in Boeing. I can't say if you like discounts. Well, there's no reason to not like this discount. Let's just have some fun here. So in the last... randomly choosing here, in the last 8 days, you got a 35% discount on Boeing. That's just in the last 8 days. So if you like looking for discounted stocks that are extended in the short term, I would certainly understand if somebody decided that Boeing was a pick for them. I can't tell you what to do, but there you go. That's it. All right, I think I have covered everything. I know I've covered everything, actually. So we'll see what tomorrow has in store. It's going to be exciting. The rest of the week's going to be exciting. There's no chance that this market just calms down all of a sudden and we just like, oh, that never happened? That's not happening. Tomorrow will be just as exciting, probably more than today. And we'll be covering it, so we'll be back there tomorrow. And I appreciate you guys watching. If you stuck around here, hit the subscribe button. That helps us out. It only takes a second. Just click it there, and we'll be thankful for you doing that. But otherwise, just happy you're watching. Enjoy the rest of your day, and we'll see you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.